First, let's talk about lot size values just so you understand. As you can see, I built a little table here on the side just so we can reference that as we're going forward. But for those of you that don't already understand, if you're trading a lot size of about 0.01, that's going to be about $10 per pip when you're trading a USD pair. If you're trading a cross-currency pair, as I have noted down here below me, it might vary a little bit depending on your broker. But for the most part, we can use round numbers for this stuff, right? To make the math easy, let's call a 0.01 lot value being about 10 cents per pip. Let's call a 0.1 lot about $1 of value per pip of movement. So then you could understand that 1.0 or a standard lot would be about $10 per pip, and 2 standard lots would be $20, and so on from there. Follow me so far? Give me a big thumbs up if you do. Now, next, since we understand the lot size difference, let's talk just about the distance in pips and how that turns into dollars before I show you these examples. So if we're trading a standard lot and it goes about 20 pips on a USD pair, that's normally going to pay us about $200. Same way as if we are trading a standard lot and it goes against us and stops us out for 20 pips, that's going to be a $200 loss. If we're trading 2 standards and it moves, let's just say 16 pips, that's going to be about a $320 win. In the same situation, if you were just trading a smaller lot size at 0.05, that $320 win only pays you $80. So you can see here how I'm going to show you some trades going 18 pips, 9 pips, 24 pips, 37 pips, all these different distances. But depending on the lot size that you're trading, that's going to determine how much money you make or lose in these trade setups that I'm showing you. Me and the rest of our team are easily able to identify almost every single day using our ASFX system. So now you should understand the pip values, you should understand how lots convert to distance and how that turns then into dollars in your pocket so we can move forward to addressing risk. Risk should always be calculated as a percentage of your overall account balance. I don't understand people that try to use a fixed lot size because that's going to be a different risk percentage against your overall account every single time, and that doesn't make sense. You could be risking too much. So what you should be doing is calculating the risk based on a percentage of your overall account. So just keep in mind, I know this is simple math, but I have to remind people for some reason. $2 is 2% of a $100 account. So if you come to me and you want to open a $100 account and copy the trades that I'm about to show you and hit these trades like I'm going to teach you how to hit them, and you're only risking about 2% because you're using a regulated broker and that's all they allow you to do, you're only going to be able to make about $2 if you go 1 for 1 on a $100 account. If you're trading a $1,000 account, same trade, only $20. $5,000 account, you're making $100. So still, in any situation, not life-changing money. So keep that in mind as we're talking about these trades that go 9 pips, 19 pips, 27 pips. You're going to need a larger account to make these pips really be substantial value. But you don't get that larger account if you don't start hitting them now with the smaller account consistently and following that process. So before we get into it, the first trade I'm going to show you is Euro USD from today, actually. It was a great trade this morning, no pain at all, beautiful rip. I want to walk you through the time difference between what you would think, wherever your time zone is. I'm in New York, I'm on the East Coast United States time zone, and this broker time zone that I have here. For some reason, it's GMT +2. So you can see my Euro USD sell entry time today was 12:07. In reality, that 12:07 is actually 5 a.m. New York time. So when we go through these trades and you see some at 13, 14, 15, that's 6, 7, 8 in the morning. I'm showing you these trades today. I chose these winners and losers specifically because I wanted you to see the trades that can happen, like the title of this video, before breakfast, before most of you go to work, because I know there's a lot of people that want to get started in trading but have other jobs, have another commitment. This is something that you can do early in the morning before you go to work, or even later at night. I should make another video, part 2 of this, trading after dinner. You know what I mean? You can do this later at night. You can make this work because the Forex market is open 24 hours a day, 5 days a week. So now, here's the photo of my Euro USD trade. This, like I said to you already, I was in this at 5:07 this morning, well into profit by the time we moved into 6, 7, 8 o'clock in the morning, and this thing continued to fall as the day went on. So a really nice trade here, hitting it before breakfast. Here's another example. This is Euro AUD going back into last week on the 25th. This was a trade that I entered at 13:35, so that'd be at about 6 a.m., 6:30. Again, before most people are eating breakfast. As you can see in the photo, I'm up 18 pips there. The P&L at the bottom here, you can see I pulled 28 pips from the best position. Just a really nice trade, again, before most people are eating their pancakes.